Welcome to Adding Dollars. In this video, I'll be going over how much you could have made if you used the wheel strategy on NVIDIA stock. I'll be testing this over a 2-year period and showing you the backtest results. Before I jump into it, if you're new to the wheel strategy or covered calls and cash secured puts, then make sure to pause the video and check out the videos in the description. Now let's go ahead and jump into it. I'll quickly start by describing the wheel strategy, and then we can look at the specific wheel strategy that I'll be running in my backtest. So the way the wheel strategy starts is you start by selling a cash secured put, and then if you get assigned on that position, which basically means the stock ends up closing below the strike price of your put at expiration, you end up having to buy 100 shares of the stock for each option contract that you're selling. So in this example, let's pretend we're selling one put option contract. If we got assigned, we would be obligated to buy 100 shares of the stock at the strike price of the put. So if we get assigned, we now own 100 shares of the stock, and then we would start selling covered calls. So we would sell a call option at a price higher than the shares that we own. And what could happen in this scenario is if the stock price ends up closing higher than the call option that we're selling at expiration, then you end up getting assigned and have to sell your 100 shares of the stock. And then as you can see here, the process would just loop back and start over again. The alternative path is when you sell this cash secured put, the stock price might not come down below the strike price of the put option that you're selling, in which case you're not assigned, which means your cash secured put expires. You just get to keep the premium from selling the put option and then repeat the process. Let's say you do that a couple times, you then end up getting assigned because the stock price does come down low enough. You end up buying 100 shares of the stock, and now you can start doing the call portion of it. If you sell a call, but you don't get assigned, which means the stock doesn't end up closing above the call option strike price at expiration, then your call option just expires, you get to keep the premium, and you just repeat selling calls until this other path happens. Eventually, if you do get assigned and have to sell your 100 shares, again, you start the process over again, and that's why they call it the wheel strategy. Now let's go ahead and look at the specific wheel strategy we'll be doing for these backtests. This is exactly the same diagram as the wheel strategy with just a couple more specifics around the strategy. So in this case, we'll be selling a cash secured put that has a delta of less than or equal to 0.2. You can think of delta as the probability that that option ends up in the money. So in this case, we're only going to be selling options that have a less than 20% chance of ending up in the money, or you can think of that as less than a 20% chance of getting assigned. So you may end up just selling put options for a while because there's only a 20% chance you end up getting assigned. And then once we do get assigned, we'll sell calls that have a 20% chance of getting assigned. So again, you may end up just selling calls, collecting premium until eventually the stock does rise and you get assigned, have to sell your shares, and then repeat the process. Additionally, I'll only be selling options with weekly expirations, so expiring the following Friday. And then I'll also be doing these backtests with only one option at a time. I'm not going to be selling multiple options. If you're interested in seeing backtests with different delta values, different expirations, or a different number of contracts, feel free to leave those down in the comments and I can share the results. Now that we know the strategy that we're backtesting, here are the results. I've written some code using the Quant Connect platform to backtest the strategy, and this screen shows the results. This is a backtest starting from January 5th, 2022 up to January 5th, 2024. The main numbers to focus on here are the equity, the net profit, and the return percentage. The equity is how much you would have made if you went ahead and closed out all of your potentially open positions. We started this experiment with $53,000 and it has grown to approximately $57,000, so a profit of about $4,000 over the last 2 years, which equates to about a 7.58% return. The other main thing that we like to look at is the drawdown. So this would be the maximum amount that your equity was brought down during this 2-year period. And based on this, we can see that the max drawdown is about 17%. As always, I also like to compare this against the buy and hold strategy. So in this case, we had a return of 7.58% total over the last 2 years, whereas if you would have done the buy and hold strategy on NVIDIA and bought at the beginning of 2022 and held till about January 5th, 2024, you would have a return of approximately 80%, which is significantly higher than the 7.5% return from the wheel strategy. One thing to call out though is that the max drawdown of just the buy and hold strategy would have been 58% approximately. So at some point your equity would have been down 58%, whereas with the wheel strategy, your max drawdown was about 17%. And I always like to compare this against the S&P 500 as well, if you did a buy and hold on that. So again, looking at the start of 2022 up to January 5th, 2024, here we can see a return of approximately 0.39%. So in this case, the wheel strategy on NVIDIA with a 7.5% return beats out the buy and hold strategy on the S&P 500 over that same time period, and the max drawdown on the S&P 500 was approximately 23%, whereas the max drawdown on NVIDIA using the wheel strategy during that time period was approximately 17%. One additional thing to call out, it looks like the buy and hold strategy beats out the wheel strategy just looking at NVIDIA stock. The wheel strategy typically performs best in a sideways market, and in this case we can see that NVIDIA had gone down pretty steeply and has also increased pretty significantly over the last year. If you enjoyed this video, don't forget to like and subscribe, and if you have any questions, comments, or want to see this analysis on a different stock, feel free to leave that down below as well. And I'll see you all in the next one.